Hi everyone, it's Stuart here, and welcome to our coverage of the FOMC announcement for January 2025, the first of a number of meetings for 2025. Obviously, the mood has changed very significantly. We're now looking at possibly no cuts for 2025, possibility of even rate hikes for 2025. Who would have thought it 3 months ago, eh? But there you go. That's markets for you, and I'd never expect the unexpected. And as we saw on Monday, when many are saying that's a pivot point for the AI business, we saw that massive sell-off for Nvidia and the wider AI stocks. Nasdaq was down 3%, and then yesterday Nasdaq bounced back 2%. We're down again today, so always manage your risk. It's always been my mantra when it comes to trading. Today we've already had the Bank of Canada delivering you could argue a bit more of a hawkish outlook than perhaps many were expecting. They announced a rate hike of a rate cut of cuts me hikes mixed up, a rate cut of 25 basis points. That was very much priced in. The market was very much expecting that. I haven't got a drink with me, which is bad planning, isn't it? It's not much left here. The markets were anticipating that, so there wasn't really a move. This is the dollar CAD here on the 15-minute chart. So earlier we'd rallied quite significantly, and we closed out the second half of our trade we'd had last night on the dollar CAD. Nearly caught the top of the market, believe it or not. 144.67 we got out for a total gain. I can't remember what total. I don't know, 50 odd pips, I think it was. On that, I've written it down on my spreadsheet over here. But anyway, I said the Bank of Canada did was expected, but they also announced a cessation of QT, and then the big surprise was an announcement that they were going to start rebalancing the balance sheet with starting to repurchase treasuries, Canadian treasuries. So we had a move back down in the following half an hour, and as I said, dollar CAD spiked all the way down here to 144.20. Then we moved back up again. Dollar sort of found its feet again, and then we've moved down in the last hour or so quite significantly on comments from the incoming Trade Secretary Lutnick, who talks about Chinese tariffs must be the tightest, and he also talked about possible no tariffs for Canada if Canada can move something to stop the fentanyl flow over the border, which is something Trump has banged on about all through his election campaign, and made a big deal of it in this pre inauguration period. So JFK Jr. was also cross-examined about becoming health secretary. Lots of chances for the Democrats to pin him down on some of his perhaps more outrageous or more out there comments about all sorts of things, everything from vaccines to food and everything. So really, my point being, this is more of a political announcement as we move forward, really, rather than a technical or economic one. The Fed aren't moving today. That's priced in. So basically, here the dollar CAD has ended up. Dollars weakened into the announcement as the Canadian loonie did earlier on. So we're at 144.20. If I just run through the other majors here, sterling's at 124.50 zone. I had a better day today. This is a 15-minute chart, so we went under 124 just after lunchtime here in London, and we've recovered to 124.50 zone, 50 pips up. Euro also went under a key level here this afternoon, I should say, under 104. It's recovered 104, and we're up 20 points there to 104.20. So dollars weakening into this announcement and what the Fed will do. So obviously, as we move forward, it's the Trump factor. Trump has already said he wants lower interest rates. I'm saying he's got no control over the Fed. The Fed is relatively independent. There was somebody who was saying today, I think it was on Bloomberg, If he'd wanted to sack Powell, he would have sacked him the first time. So Powell looks relatively okay in his position, but it's this idea that the Fed got caught out back in 2021. There's this issue about if is this the pause or is it a stop? Many are saying, that we were talking about, literally 3 months ago, we were talking about 5 or 6 rate cuts for 2025. Now we're down to possibly 1. Exception is 2, and I say some analysts are talking about even hikes later on in the year. Personally, for what it's worth, I can't see rate hikes happening in 2025. It will be a big barn door to beat them up with if that is the case, and obviously the political pressure remains on to cut rates from the White House. But the impact of tariffs and how big or weak these tariffs are going to be and how inflationary they're going to be. They weren't that inflationary last time. Inflation's come down significantly since then. I'm saying last time, the first Trump administration. So, yeah, as ever, time is the healer. Time will tell. And at the moment, you pay your money, you take your choice. So we've been trending lower here for euro dollar this morning. We bottomed out 103.88, and we've been trending higher post Looney and post or head of the Fed this afternoon. I say so. Some key members of Trump's cabinet. Remember, they're not actually inaugurated yet. They're not actually. This whole team haven't been announced. Well, it's all been announced. They haven't been rubber stamped by Congress and the House. So most of them will get through, obviously, because they're Trump appointees. And so we expect these policies to come to fruition. But just like he had a knockback with Colombia when it came to tariffs over the last weekend, when they re-tariffed, or they threw tariffs back at US imports, and it all sort of fell apart. Some of these executive orders, there's hundreds of them now, are obviously all not going to get through. There's been legal appeals. There's been certain aspects being legal action taken, suing proceeds in place and stuff. So yeah, lots of noise as ever, but it seems a little less chaotic than last time. So he relatively knows what's about. But as far as the Fed's concerned, they remain independent. They remain targeted for 2% on inflation. And that's their focus. So how Powell actually plays today, because there's no actual policy, there's no dot plot change, there's no there's no projections tonight. There's simply this statement, which is likely to say, the labour market is cooling a wee bit, but still remains very robust. The actual numbers remain very robust, but again, there's this nagging doubt that perhaps there is a sign that certain parts of the labour market are finding problems. There's certain parts of, people trying to find an additional job or a new job, finding it more difficult. Somebody coined a phrase today. I was reading about jobs hard to get factor. People can't get the job they want. There's lots of part-time businesses. I mean, we talked about this for a while, about the part-time function of the jobs data. That's grown quite significantly, but some of the full-time positions have shown some stagnation. So there is a cooling in that jobs market, although it remains very robust, as we saw with the weekly claims still around that 220,000, and the non-farm payrolls remain very strong as well. I don't want to keep talking when obviously the news comes out, but yeah, I mean, so that's obviously another key part of things, how people feel. And a lot of the there's interesting data. I think I said this last week about people paying the minimum on their credit card payments. It's been the lowest for 10 years, and that's a real indicator of how people are feeling financially in the US. And that was one of the key economic drivers that got Trump back into the White House. And, the feeling that inflation was still biting, it was still around, and the stickiness we've talked about for the last 2 years is still there. And so it's come down, it stopped coming down. So where do we go from here? And that's always the issue. So are we going to remain at these levels higher for longer, potentially? Is it a pause? Is it a stop? And then maybe nothing happens over the summer? Who knows? But we are right at the beginning of the year. It's the first, obviously, meeting, as I said earlier, of the new year. So yeah, things change and can change quite quickly. central bankers don't like that. They don't like things changing quickly, so they're trying to be in control. Remember, we were talking about this Goldilocks scenario where everything was going up, gold was going up, bonds were going up, and stock markets is all-time highs. You know, we've had this big shakeout from this week, Black Monday, Blue Monday, call it what you will, deep seek, and then bounce back Tuesday, turn around Tuesday, where the market's 3%, then bouncing back 2%. So let's see what comes from the decision. So market's literally sideways actually. So euros 104.16, giving up a bit of a ghost. The Aussie 62.30, CAD we've had a look at before, and the yen holding this key level. This is one many are looking at, the 155 level for. Let me zoom that in. Can you see that? Yeah, for dollar yen. Remember the move by the Bank of Japan last week was viewed quite disappointingly. We haven't had a big move up for the yen. The yen hasn't improved at all, although obviously the dollar's come down a wee bit. It's still holding this key 155 level. So see how we move from here. That's the 50-minute. I'll just go back to the daily and see this big move down. We talked about this on a lot of the positions for the yen. If you just go back to run through, so I've put some little fib levels on all of these, the major crosses. So has the downward move here for the euro and sterling ended? They were the ones that were under the biggest pressure. We've had this move up over the 20-day moving average here on this week, but capped by the 50-day. So if this leg is over, it's a bit too early to tell, to be honest, but we'll see. That suggests the next fib level to the downside is at 122.60, and the extension lower if the dollar strengthens again, 118.50 to the downside. So hopefully everyone can still hear me. I'm getting some messages here. Right, okay, everything looks okay. Sorry, last time we had some issues when we were broadcasting the Fed announcement markets. The network got a wee bit congested. Right, 3 minutes to the top. So let me just have a look at the euro. We've done a similar thing here on the daily. The euro is a bit stronger. Remember, the sterling was the weakest of the big bunch. It has breached its 50-day moving average, the euro, on the 24th. Like sterling went through its 20-day, but it's back to it now. So euro's looking okay, and the big line in the sand for the euro is 105. With sterling, it's the 125 area, which is still out of reach up here at the 50-day moving average. So similar patterns on there, both of them being under quite significant pressure. The others, the commodity currencies have been under similar pressure. We just had a look at the Aussie, similar thing, into the 50-day and moving down again. So the low from January here at 61.40, and then the extended fib level would, would take us, whoops, that's actually there, takes us down here to .6026. This, if this is just a retrace of the leg up here, we need to break the 50-day moving average, as with all of those end of day charts that we're looking at now. CAD, different. We said this earlier today. If you weren't with me earlier today, we see this big congestion at the top of the chart, which is always quite positive, or not always, quite typically quite positive. The longer this goes on, this congestion, the bigger the breakout can be. It looks like we were going down here on the 20th last Friday. It didn't happen. Interestingly, big rejection of upside prices here on the 20th and the 21st here. We were short here, that didn't work out. We were long last night, that's worked out. We've got, I say we closed the second position earlier on today, but we're still in that channel, basically. We're still channel bound. So this one needs to break significantly below the 20-day moving average and then test the 50-day. So it's still a weak loonie, and that's going to continue given the political uncertainty in Canada. The Conservatives look like they're going to be the next government there. The Liberals with Trudeau stepping aside, possibly Mark Carney, the next leader, former governor of the Bank of England, of course. And obviously the whole political tariffs thing with their nearest southern neighbour, America and the United States. And as I say, chatted today about fentanyl if it's sorted out. There'll be no tariffs on our dearest neighbour, Canada, is what's been said today. So we'll see what actually happens. Obviously, there's the old NAFTA, North America Agreement, NUCA, I can't remember what they called it, but remember that was the thing that was that Trump negotiated and got both Mexico and Canada to sign up to, and that's due for renegotiation in a couple of years' time. So anyway, let's have a look. Let's see what the euro. Let's bring down the. Let's just go back to the 5-minute chart. See if there's been any reaction at all to what's widely expected. Well, we've got a move down, so the dollar's improved on that. Obviously, the Fed has left things unchanged as expected. Let me have a quick look at the statement. If it's so just bear with me a second to see it's top of my head while I'm reading this down here. Sorry, excuse me. Anything that stands out to me immediately? Economic to continue to expand, solid pace. Unemployment is stabilized at lower levels, which we talked about. Labour market conditions remain solid. Inflation remains somewhat elevated, so still somewhat rather than previous comments about inflation. So he's still saying a solid labour market. Committee seeks to achieve maximum employment at 2%. We all know that. The committee judges that risks to achieving this employment are roughly in balance. So this is what we're talking about in balance. The economic outlook is uncertain. The committee is attentive to the risks of both sides of dual mandate. We decided to leave things in the range. The committee will carefully assess incoming data. So many are criticising they've been a bit too data dependent, too focused on the data rather than the wider rather than the wider, sentiment readings we find in wider sort of small town America. Basically, the people that have backed Trump quite significantly. The evolving outlook and balance of risk, the committee will continue to reduce its holdings of security. So it's talking about reducing its, bit like the Canadians got rid of a quantity tighten. They're talking about reducing their balance sheet. It's massive, massive debt. The committee is strongly committed to supporting maximum employment. Nothing new there. But so we're all in choices. No, yeah. So it's as expected, really. I'm not quite sure why dollars moved down on what I've scanned briefly on this of what I can do doing it here live. The points we will continue to model the implication. No, absolutely nothing in there. I mean, the numbers, the key words might be the inflation remains somewhat elevated, and unemployment rate has stabilized at a low level in recent months. I stopped going. It's leveling. Full employment, as we've talked about before at non-farm payroll broadcast. But so yeah, I suppose that you could argue it's dollar positive. It's not really on that. There's nothing, to be honest. That the movement seen in the euro here. Here, where were we? We were at 104.19. We're at 104.8. So 8 pip move. It's take the spread into account. It's like, well, what's the point? So yeah, it's sort of thing you would expect. Obviously, expectations took us. Let's see what we're doing. Some market makers. Remember, market makers are looking for deals, so they'll put these extreme numbers up, these options, and so they've tested down to 104. Nobody's buying, nobody's selling down there currently. Obviously, things change, but yeah, whether the euro holds this rally from the low of today or not, we'll see as obviously the rest of the day rolls on. The stock markets have, as I said, had been under pressure all day. Let's have a quick look. Actually, let's have a quick look at gold, because I know a lot of you are a lot of people of you just sit on the gold trade. So this is the 5-minute on gold, and gold is weakened similarly to the move you can see. You saw on the 5-minute chart on the euro there. So we've breached the 2750 area, which we bounced into 3 times here, coming up to the decision. But as you can see here, this is the 5-minute chart going back to this morning. There we are. We've been more or less tripping lower for most of the day. I thought we'd caught the bottom there. I got stopped. I think I was long and got stopped out. I can't remember. But that was we were playing with the VWAP earlier. But yeah, certainly since this the political announcements is that the announcement about no potential tariffs on fentanyl from Canada, and there's going to be strong Chinese tariffs, or what did Luke actually said? Chinese tariffs, if they need to be the tightest of all the tariffs. So I nailed down. And then there's the question mark over what DeepSeek did as far as some of the OpenAI code it's used, and is it and exports of it to China from the US. But they'd be a bit foolish to say they've developed this thing and it's only cost us millions rather than billions. If when people drill into the code over the next few days, few weeks, and find the truth in there, but it's it seems to have been incredibly popular. So gold continuing to unwind, the dollar's continuing to lift on what I said. There's no press conference immediately. The yield, we haven't got the yields to show you here, but 10-year yield has moved to 4.8. It's up 0.34. So that's quite a significant lift in the 10-year. So yeah, dollars up, yields are up, and gold's down. And I would guess the stock markets have been a bit hit as well. Let's look at NASDAQ, the most volatile of them all. It's not been too bad, actually, has it? The stocks haven't reacted like the forex and the credit market, the treasury market has. So, but again, the trend remains set. That there's nothing the Fed have said today to change this downtrend for the stock markets today. Anyway, remember these are only 5-minute charts we're looking at. But the impact of Monday, obviously, when we come back to look at this, it will be a significant day as far as stock market's concerned. But in the whole scheme of things, it wasn't that. It's not a massive candle, is it? In fact, the body of the candle on Monday, it was less than some of these moves we've seen previously, and certainly much less than the December 18th shakeout. I mean, that was on final, wrapping up of the year for many. But yeah, the total distance traveled, the total average true range for Monday was huge. There was a massive gap as well because it was an announcement of this DeepSeek model over the weekend. So we crashed quite significantly, but we bounced back yesterday. But again, as put my technician's hat on here, you can see, although we bounced back, excuse me, 2% of the big sell-off on Monday, it's still less than half of the body of the candle, and that's still bearish, and it's an engulfing candle. The negativity was still within that, so we need to break out of the to the upside here, which sits around 21.6, whatever that is, 21.650, if we are going to poke to new all-time highs. Or we continue to break down. Obviously, the earnings, which are in the middle of the season, it's tech week this week as well, that is going to have a significant impact on that. And tonight in particular, we got Tesla, we got Meta, and we've got Microsoft all reporting tonight. And then tomorrow, that used to be the daddy of them all, probably is now perhaps the biggest company again, Apple report, but Apple not as exposed to AI as many, but still sort of lagging a wee bit as far as that's exposure. I'm a hand on heart, I'm a big owner of Apple stock, so and have been for a long time. But that'll obviously have an impact on going forward. But some of the earnings are eye-watering. Forward earnings on Tesla are over 100 now. That's a big delivery, but they've been delivering over the last couple of years. So but again, very volatile stock, and the CEO got other things on his plate now, not only spaceships and going to Mars, but his whole political future. NASDAQ down for the day, as are the other stocks. The S&P 500, the world's most significant stock market, again big down Monday. Engulfing candle from yesterday, but a decent bounce back. But again, that's wiped out today and to the downside. If we look at the looks like there might have been more of a significant reaction on the S&P 500. Indeed, there has. So again, another one that's been trending lower all day. And I think with these trends, with these big candles, don't try and fight it, guys. It's what happens. Very good. I've got Bloomberg feed just running across here. I've news from CNN as well. I missed it as I was reading it, but the Fed has removed reference to inflation making progress towards goal. That was that's a very good point. They're just saying inflation remains somewhat elevated. Yeah, I missed the nuance on that. But certainly they're still convinced that labour market is still very stable. There's some more questions being raised about that, but certainly stocks seem to be getting the brunt of this reaction. Over in Europe, we closed positively. The DAX hit new all-time highs today into close. We just look at the daily time frame. I know a lot of you trade the DAX. I trade the DAX on an intraday basis. It's been a great one. Another positive day for the German 40. Up to the upside, new all-time highs. The FTSE in the UK, less so. We can't quite get back. There's Wednesday. There's Monday's rally bizarrely, but we're not. We had a move up along with the DAX today, but 58592 has again been another intraday high for the FTSE as the sterling starts to come back a bit. That should pause that rally, but again, we took a lot of nice points off out of the stock markets over the last week or so. If you guys, if you're not following us on Discord, if you're not a client, do join us every night. If there's a trade on an end of day basis, I'll post it on our Discord group here for everyone. It's in the trading strategies numbers. So last night we had a short on the Aussie yen, even though the risk was obviously the Aussie inflation was due. We were long pound Aussie. We'd moved that up. We closed that all completely today. So these are posted live. So it was 10:30 last night. I wrote that, and we were long dollar CAD. Not looking for a great move. Obviously, there was a big risk today. We had the Bank of Canada and the FOMC, but again, the market priced in what we was expecting, and there wasn't anything suggesting any surprises anywhere. And so these were our entries and targets from last night. So they were successfully hit today. So. And then this afternoon, I just posted an update. They were both hit. So half the Aussie yen position was closed for 24 points, and then stop loss was moved down as we're trending down. That's still open. Dollar CAD, we closed half of that, and then I closed the other half, which we'd left on. So it hit target, and 50% of it was 50% of the risk was taken off. And then before the Bank of Canada, we saw that spike to these highs. I was watching it. Literally, I hadn't programmed that to happen. It was just I was in watching. Was dollar CAD gone? Dollar CAD here. During the day we were up here, so we got out as we showed you earlier, right at the top. So that was that from earlier on this afternoon to 2 o'clock. Another 37 points. So we've had a good day today. We're up 87 points. We were down overall yesterday, 65 points. We're up 200 odd points because of all those big moves in the indexes for the week. We're up 289 points. Points make prizes. Points make whatever you want them to be. Points, pips, depends. Again, it depends how you're trading this with your live account. So anyway, that's what we do every night. So watch later on tonight to see how the dust settles. There's still a couple of hours for the market to absorb what the Fed has said or what it's not said. Basically, what it's not said, and what's the anticipation of the situation with the rate hikes. Now, if I just click here and we open up the CMC candle watch, so see how this has changed. Given that's obviously now. I mean, it's obviously not. Obviously, wasn't updated because this was today. This is already out now, so it was a given. So we'll check this later on tonight. It's the CMEgroup.com markets open earn interest. This is what the futures market is predicting, and the options market is where the Fed is going and when it's going. So that was given. The March meeting was 60, so 75% chance of no change. This is where we are now, 25, 425, 450. So again, no change. 75.25 for March. May, it's 50.50, yeah, 56. So it's come down to, it's gone, this has gone back up as well. This was down to 50, it's gone up to 56, 37.8, less than 38% chance of a 25 base cut by May. June, it should be in, yeah, so chance of it, there's only a 30% chance of by the summer the rates still being where they are, and a 20% chance of a 50 basis point cut from where we are now by the summer. That's, you know, see how that obviously transpires. So have a look at that, guys. It's just gives you a feel for where the real market is, and it's a free tool as well. You don't have to pay for any subscription on that. But anyway, let's just go back to that. Let's get rid of that one. Let's get rid of that one. We'll get rid of that. So there we go. So any particular assets, guys, anybody wants to have a look at? Let's have a quick check at the boxes. No, let's just go back then. So we are 15 minutes into the announcement. Let's just look at our 15-minute chart. So Aussie on the 15-minute, it should be showing us a stronger dollar. So big down 15-minute candle. This rally from 2 o'clock today has run out of steam, and you know, if you're trading 15-minute candles on that strategy, that would have triggered you short the Aussie. Let's have a look at another setup. I said this afternoon, guys. I don't know how many of you are here, but you know, it's not. People keep asking me, well, what's the best strategy? What's the best time frame to trade? There isn't a best time frame to trade. There isn't a best strategy. It's what works for you. It's what process works for you. There's 5. Unfortunately, TradeLocker only allows me 5 layouts, but it does. It's nice because it as soon as you open a new layout and you open a new chart, it applies the layout straight away. So that's quite nice. But I can't have lots like I had on other platforms. But so it's not these layouts, it's not these strategies. It's how you apply the strategy, because most of all of these are winning, will work. All of these work well enough to make money. What do I mean by well enough? Well, they make, you know, they win more than 50% of the time. I mean, flicking a coin is only 50-50 odds, isn't it? So they're around about 60-65% win rates. But problem is, most people can still blow a winning position. You know, they win 60% of their trades, but they still lose money. And the reason is because most people can't deal with losing. So although they're winning 60% and losing 40%, or even 70% and 30%, they still lose typically twice as much than they win. There was a huge study done. It's quite old now. It's probably 8 or 10 years ago, where it looked at, you know, 25,000 traders, millions of trades, and it was a 1.7. So for every dollar traders won, and they were winning, you know, more than 50% of the time, 55% of the time, I think it was, the 45% they lost, they were losing $1.7. So it was wiping out any gains, and it's because of our minds, and that's what we need to conquer when we're trading. If you want to be a successful trader, you need to get a mirror, look yourself in the face and say, can I cope with risk? How do I deal with losing trades? How do I deal? Look, if you were trading this, for instance, if you were trading this and you were long, this looks quite nice. That's quite nice. That's quite nice. And then all of a sudden you get this big red one coming down. How do you cope with that hitting your stop loss or taking you out or not having a stop loss? Think, oh, it's going to come back. And that's what too many traders do. They don't accept when they're losing to get out. It's finished. It's over. There's going to be another option to get back in. So what can I say? It's all about you when it comes to trading, guys. It's not these big announcements. It's not listening to all guys like me prattling on for far too long. It's having something that works for you and works for your time frame. If you're if you're cut out to be a scalper, you know, trade the 1 minute or the 2 minute time frames, in and out, in and out, in and out. You never get attached to anything, so you've got no emotional contact, or you shouldn't have any emotional contact connection to anything. If you want to be a scalper, I really like the VWAP. This one here, this setup, using ATR candles, so using Heikin-Ashi candles. The VWAP, where are we? It's a bit like a moving average, but it's volume weighted price and average price, and it's very, very popular with many people that trade with prop trades, prop companies. So are we above it or are we below it? So this has been, it's been short all day, came back to it, held it, broke through it, broke through it. But, the trend, again, looking as a moving average, it's been generally to the downside. So that, the trend, the moving average would have been long, short, and now we're short again. So, but an end of day guy doesn't care about what these 5-minute charts are doing. All he's cares about is this chart. And we're down again today. We were down yesterday. We're down again. Well, that's not a surprise to me because we're moving down. We've got our, I'll remember we've got this. We put the Fibonacci on the other style chart, didn't we? But the trend generally still remains down. But we're now through where we are now. You'd argue here. You look at this tonight when it's completed. Well, we're back to this pivot area which we've been at since this big sell out sell down from the 18th of December. So it's about applying the strategy that works for you, the time frame that works for you, on the market that works for you. And for me, my approach works across all markets on all time frames. I'm biased to trend following approaches. Most of these strategies here are trend following type strategies. This one's this Bollinger Banner stocks is a mean reverting one. But it's what works for you and what time frame. I was say at the end of days when I risk my real money, and then I'm sharing. Currently, I'm sharing it with you guys on Discord. So come and join us. We're here to help, and you can invest with us. Become PropTrade. Sorry, that one. Become the PropTrade from $55. And it gives you a $5,000 account, but you got to understand what that means. It doesn't give you the ability to perhaps take all the trades you might want to take. So whether you're buying a one step to get to a funded stage or a 2-step, which most people do, get a decent size one. I would say 25 or 50. You don't have to jump all in, but 50,000 for less than $300 because we got. Thank you. I can't type here this night. I'm really hungry actually. I haven't had any dinner and it's 7:30 here, so just bear with me. So I'll wrap up in a minute. Thank you 15 gives you a 15% discount off our standard prices, which are really, really competitive anyway when we look at out in the market, and you get you get grown-ups in the room, you get grown-ups running the business, and we do know what we're about. We're here to help you. If you're successful, we're successful. So come and join us, get on our Discord group. We're having a great January. Get a decent sized account if you do get an account, and trade with a stop loss, trade with a take profit, get out when you're losing, let the winners run. And before you know it, you'll be a funded trader and, sharing the profits 80% they start from up to 90%. If you want to do a one-step challenge, obviously the targets are higher, 12%, not 10%. So, but you haven't got the second step. So it's all there for you guys. Okay. So I'll see you all tomorrow. Tomorrow is something quite significant. Tomorrow. Oh yeah, the ECB. There was something else. I knew there was something else happening this week. Yeah, the ECB. So today's been quite significant, but not significant with all due respect to the powers that be in the central banks. The stock markets have gone down again, having bounced back yesterday, moving down again today. The dollar's back on the front foot, as you can see. Let me just do this with the Aussie. Actually, we should leave with the CAD, shouldn't we? Because the CAD's been the other key one. If we look at the hourly chart, and this is direct. This is again an impact of how the political situation would sway things. So we were up, and then we were down, and we're dollars back up again. We're back over. We never went under 144 today, and we're back at 144.34. So the bias is again, you see, is dollar positive and loonie pressured. So yeah, ECB tomorrow, euro tomorrow, gold as well. Somebody's just asking about gold. What's happening with gold? Well, gold will remain pressured as the dollar's having a good hour. Yeah, gold 27.45. So the 27.50 key area has been breached as the hourly chart. So again, it's been weak. and it's been under where there we are. It hasn't been on for over the VWAP since 10 o'clock this morning. So on an end of hourly basis, the VWAP's a bit more. It's better on the lower time frames. An hour's a bit too high for us. You can see it. But anyway, if you want more details about how to use these indicators, ask me. I'll do some training webinars as well on all this sort of stuff. So. Right, before I run out of steam, I've run out of water, I'm going to wrap this up. So I'll see you tomorrow for the ECB. Again, 25 basis points. Miss Lagarde is, she's a great, they are producing outlooks and forward guidance tomorrow. Obviously, Powell's got his press conference in it's actually about 5 minutes, isn't it? But I'm not going to hang around. I'm not going to hang around for this. You can watch it yourself if you want. He has got press conference. My brain's gone to fudge. Yeah, press conference in 5 minutes. Yeah, it's 7:30. So again, we could have a bit more. All of this could turn around if he says something unusual. He'll obviously be questioned about. Presumably they'll about Trump calling for rate cuts. He won't get drawn on that. He'll obviously be asked about his position on what happened over the weekend with DeepSeek and the AI in the future. And again, he probably won't get drawn on that. He's very careful on that. It's just the question is, the market needs some sort of confidence that this is we are still going to cut this year, which probably will happen. But the chatter about rate hikes, he'll probably want to put that to bed, but he won't say anything directly as direct as that. Obviously, they never do they? But right, let me leave you 27.45 gold. Euro 103.09, so we're back under 104. Sterling 124.23, and dollar yen lifting away from the key 155 area, 155.43 for dollar yen. So take care, everyone. Have a great evening. If you've got any questions, join the Discord group and stick it on the box. I'll be posting some positions later tonight if there is any. Let me have a quick check of my little strategy, sister end of day strategy, which is over here on a different workstation. I can't share it with you, and it's not connected. We've got potentially Swiss yen position, euro yen, and interestingly euro dollar potential end of day positions tonight. But we'll see what happens when we get to the end of the day. All right, patience is key, discipline is key. Okay, don't jump in. Okay, take care. See you all tomorrow. All the very best to you and yours, and see you for Thursday and Miss Lagarde and the gang.